Hello everyone, welcome back. I got some really good ones for you today on this Tuesday, November 25th, 2025. A lot's been going on with those markets. That's what we're going to be focused on for today's video. So welcome back. Glad you made it. Glad we could hang out together. I hope you have a wonderful Thanksgiving holiday. I hope you're holding your family close. You know, you're staying physically attached to God's vine, like physically attached to the true vine. You're giving thanks and praise for all the things that he's given you. You know, you're being a good custodian of your health, your finances, your personal life. You got your ducks in a row. You're keeping your friend circle tight. You know, that's kind of like the ideal, guys. So that's what I'm hoping for you. Now, if you're not getting that, I get it too. Like, holidays can be very rough. It's hard to watch people having a really good time when you're having like health problems or problems in your family or something like that. So, you know, if that's the case for you, I hope the best for you. Just keep going, all right? Just iron it out. Just grind it out. And we'll get everything back on an even keel, and we'll catch you on the next one, right? But I hope you have a wonderful Thanksgiving regardless, guys. And we're going to dive right into these markets. Now, we're going to talk about kind of where markets are, where I think they're going into the end of the year, and then what the next few years looks like. So I'm going to be looking into my hazy crystal ball for you guys, though. But it is hazy, right? So I got a hazy crystal ball, but it is hazy. If you just scroll down to any of these videos that I've done in the last few years, you'll ask yourself, if I had known that at the time, would it have served me well? Now, it just so happens we've done quite well on this channel. We've been discerned. We've been over the target. As opposed to coming out here peddling fear, deflation, telling you to save dollars, hide under a rock, wait for the stock market to crash, wait for housing to crash. No, we didn't do that in 2022 and we're glad, 2023 and we're glad, 2024 and we're glad. Now we're at the end of 2025, you guys. So if you'd been listening to the deflationists on YouTube that don't really know what they're looking about, they don't understand how the dollar empire is collapsing through debasement and inflation. Well, they just, they promote inaction and they lead you the wrong direction, and they get you all freaked out. And then as the years go by, you realize not only were they wrong, but the opportunity cost of not getting out there, participating and taking action is like cost you a lot, because every year that you've been waiting for things to go back to normal, the dollar's been losing about 12 to 15% of its value in real terms, compounded. And that's really why I started this channel, guys, was because I was worried that inflation was going to be like broad, sustained, entrenched. The dollar empire was going to be missing a lot of growth, so they were going to be printing a lot of dollars. The economy was going to be missing a lot of growth, so they were going to be printing a lot of dollars. Your institutions that are embedded, they're predicated on embedded growth obligations of like infinite growth. Well, they were going to go pathological and start to print a lot of dollars and lie to your face. And that's really the way things have kind of played out. So we've been discerned. We've been over the target on this channel. I've messed up some things, guys. If you scroll down to my video from June 6th of 2022, my predictions video, in parentheses, throw trash at me when I'm wrong. Go ahead and check out that video, guys, from a few years ago. I mean, we kind of nailed it. Well, I was wrong about the metaverse. I thought wages were gonna keep up with inflation and asset prices, so I was wrong there. I was a little bit too optimistic there. Basically, a few years ago, I was predicting, hey, stock market, that thing's going up. Like, get out of the way, that thing's going up. Gold, that thing's going up. Bitcoin, that stuff's going up. But don't worry, guys, your wage will keep up. Yeah, wrong about that. Looks like the only people winning are the ones in Bitcoin, in gold, in the stock market, in real estate. And all the people that are, saving money, well, they're getting crushed, saving dollars. Like if you had $50,000 saved in 2020, could have bought you like twice as many gold coins as you could buy today. So that $50,000 you have in savings, hypothetically right now, it's been melting like an ice cube at a rate of about 10 to 15% every year compounded since like 2020. Since the pandemic, the scamdemic, the regularly scheduled experimental gene therapy injections that everybody ran out and took, right? Not this guy. And I did speak on that too, but I was getting like community strikes. I have like 2 out of 3 strikes. It was all from that. So I really showed up. This channel showed up at the tail end of COVID after we had lost a lot of great YouTube channels to censorship. And then I kind of got my pee slapped for bringing it up a few times. And I was like, whatever, inflate or die and carry on with the plan of life. But so I'm going to do more of that for you guys. I'm going to try to predict what's coming down the pike. And the way I'm going to do that is I'm going to use 15 years of trading experience, along with understanding our institutions, understanding their policies, and then guessing the knock-on effects of their policies. That's how you use your hazy crystal ball. It's hazy, so we can only deal in probabilities. If I assign a 80% chance of something happening on this channel, that doesn't mean there's a 20% chance that it might not go well, right? There's always that other 20%. Like if I tell you, man, this is like a 90% bet right here, I'm 90% sure it's going to play out like this, we can still get that 10% that, you know, because we can only deal in probabilities, guys. Certainty is not a word that exists in this business, right? Certainty, take that word, delete it from the lexicon when it comes to finance and investing and trading and speculating. You don't get that word. You get probability, but you don't get certainty, right? So I'm going to do the best I can, but please, you know, throw garbage at me when I'm wrong, but let's try to go easy on me. And hey, at least I'm doing that. A lot of these YouTube grifters, they want to come out here, talk about markets all day, and they just talk about noise. They're like, oh, NVIDIA earnings, and oh, Amazon laid off some workers. But like knowing that information, like it doesn't really inform your decision. Like most of the market is noise, okay? So mastering the market is not about getting 50 data points and then upping that to 100 data points and then getting like this granular view of what's gonna happen and what is happening. It's not really about that. It's actually about getting 100 data points, narrowing it down to like 5 data points that actually matter and move the narrative, and then ignoring the other 95 data points, which would be your market noise. And we actually try to tune that out on this channel, and we've done a good job of that. So there you go. So let's dive right in, shall we? So we got the 10-year yield. We always start with the bond market on this channel because it's the largest market on planet Earth. It's the maestro for the band. It sets the tone for how Bitcoin, crude oil, Beanie Babies, Pokemon cards, NASDAQ, real estate, like the bond market sets the tone for all those tinier markets that I just mentioned. So we start with the bond market. Well, what do we see happening in the bond market right now? We got the 10-year yield right now falling below 4%. And we've been talking about that in prior videos about looking for that 10-year yield to fall below 4%. Now we're there. I think going into the end of the year, the 10-year yield's going to keep creeping lower. Nothing like crazy, guys. Like I'm thinking, you know, if we're at 3.99% on the 10-year right now, I'm thinking by next week we're at 3.96, and you know, by the week after that we're hanging around 3.88. You know, we're gonna just kind of hang out in this 3.5 to 4% range in the coming really weeks, months, and even into well into 2026. So that 10-year yield, it's coming down. That's the bond bubble getting fatter. People are buying bonds. I don't know if it's like the Fed doing yield curve control, or if it's you know, foreign investors, or just, you know, the bank down the street, but somebody's buying those bonds. As the bond bubble gets fatter, drives those yields lower. As those yields come down, bond prices get fattened up. As the debt bubble is getting fatter and fatter and fatter, the debt mega hyper bubble is getting fatter and fatter and fatter. That's going to give the green light for risk assets like stocks, gold, oil, crypto to inflate. You're kind of seeing that. So we see the 10-year yield coming down. This is putting the S&P 500 near all-time highs, the NASDAQ near all-time highs, Dow Jones near all-time highs, gold near all-time highs, silver near all-time highs, platinum near all-time highs, real estate near all-time highs. Real estate's cooled off a little bit, you know, a little bit, but nothing crazy. Bitcoin's cooled off a little bit, but nothing crazy. You know, it's funny. We're at 87,000 on Bitcoin right now. And like barely a year ago, when we were at 87,000, everyone was like rejoicing. You know, there was much rejoicing. Everybody was just Bitcoin to the moon. And then now today, Bitcoin's 87,000. They're like, oh my God, the world's ending. Like, sell it all. It's funny, you know, because that make it make sense, guys. But that's kind of the market noise we talk about. Like, so I don't really mind Bitcoin being at 87,000 right now. It's just taking a little breather. And I think in 2026, we're going to move back up to all-time highs. But not to get stuck on Bitcoin. We'll circle back around to crypto and Bitcoin in a minute. So you got 10-year yield coming down. That's the bond market stable and being fattened up. And that's the green light for risk assets to inflate. So we got the S&P 500 right now at 6,722. It's up 15% year to date, and it's up 48% over the last 2 years. That's gnarly, guys. Do you think the S&P 500 became 48% more valuable over the last 600 days or so? I'm going to say no. I'm going to say the dollar took a hell of a haircut. It has since COVID, and I'd say that's going to continue. Year to date, though, the S&P 500 is only up about 15%, and that's actually like, kind of par for the course. I think in a typical year, it probably does like, 8 to 12%. So we're a little bit hotter at 15%. We're doing a little bit better than your average, but it's not because the S&P 500 is becoming more valuable. It's because inflation is like frothy. Like these markets are frothy, you know what I mean? Like if you notice, like the real economy is just kind of slogging along. If anything, it's kind of weak. But the market doesn't care because the market doesn't trade on the economy at all. Maybe like 50 years ago it did, you know what I mean? But in this brave new world, the stock market and the economy it's actually inverse. The worse the economy is doing, the higher the stock market's going. So not only are they not correlated, I'd say they're almost inversely correlated. Whatever's bad for the economy is good for the stock market, because whatever is bad for the economy just means they weaken the dollar faster, they do more rate cuts, and that makes asset prices go higher. So if anything, the economy being weak is like good for our bags, which is diabolical to say, but that's the reality that the elites have engineered for you. So yeah, the S&P 500 is 6,722. It's up 15% year to date. I think it's going to finish the year around up 15%, maybe give or take a few percent either direction. So for the next few weeks going into the end of the year, guys, I don't know. I'm leaning Santa Claus is going to come for markets. You're going to see your Santa Claus rally. So if anything, I think the S&P 500 might go up a few more percent just going into Christmas. But throw trash at me when I'm wrong. We got that NASDAQ right now at 23,000. Up there, you guys. Up 20% year to date. So doing a little bit better than the S&P 500. There's kind of that NVIDIA AI bubble, Open AI, Oracle bubble you got going on. And it is a bubble, guys. AI is totally in a bubble. But on this channel, bubbles don't burst. They double, then burst, right? Just keep that in the back of your mind. So NASDAQ's up 20% year to date, but it's up 61% over the last 2 years. Do you think the NASDAQ became 61% more valuable in the last 2 years or 600 days? I don't think so, but I do think the dollar might have taken like a 60% haircut putting it there. So no, I'll give a little bit to the AI bubble. AI, automation and AI, which in my predictions video from a few years ago, I said it was going to keep sinking its teeth, and here we are. Even when the AI wars began, I did a video, AI wars begin. Type that in the search thing. You can watch me fire the starting gun for the AI bubble. But, I think NASDAQ might do quite well going into the end of the year. And we'll talk about 2026 and beyond in a little bit. So let's just hang on here. Dow Jones, 47,112 today, up 11% year to date. That's the tried and true Dow Jones, but it's my least favorite of the three major stock indices. It's the oldest. But I prefer, if you've been following this channel, the NASDAQ. I like growth. I don't really like value stocks. I like tech, guys. Tech's disruptive, tech's where the premiums are buried. Tech's where you get your nut, tech's where you get insane gains for equity. So we generally do well there. That's a tiny little plane above me. What's up, homie? Got his little private pilot's license, going along, tooting along, doing his thing. Good for him. Good for him. Maybe one day, guys, I don't really like flying that much, so no. I'm going to say I'd own my own plane, but no, because even if I had the money to own my own plane, I'd be like, nah, man. And I wouldn't put it into a car either, to be honest. To be honest, I'd put it into more assets because I like winning, guys. I like winning and I like security. I'm a minimalist, okay? Drive that 2009 Toyota Corolla with 180,000 miles on it, guys. Keep that thing going. Take that thing to 1 million miles and just buy more Meta shares. You know what I mean? I'm not out to impress anyone. This channel, it's not for my clout chasing. It's for your winning, okay? It's a little bit for my clout chasing, but it's not about me. Have you noticed this channel? It's never really about me. You know very little about who I am, where I am, I'll share more with you as time goes on, but it's not about me. It's about you winning. It's about us winning. This channel's for winners, guys. So anyway, the Dow Jones at 47,112. It's up 11% year to date. It's up 33% in 2 years. So again, do you think it's added a third of its value in the last 600 days because it's so valuable and just so awesome? Or do you think the dollar is just getting incinerated? You know, I'll leave that to you. We got that DXY, the dollar chart, at 99.8. The DXY, though, is a bit of a psyop because it's only measuring the dollar relative to other fiat trash currencies. So if you take a dollar, which is worth less than nothing, I was going to say it's worth nothing, but the dollar is actually worth less than nothing because inflation on it's 10% per year, and then your interest on it is like 1% per year. So in real terms, the dollar is a negative 9% per year quote unquote asset. I call the dollar a liability, but if we're going to call dollars an asset, it's a negative 9% per year asset. It's a liability, you guys. See how that works? If inflation on your dollar is 10%, interest is 1%. In real terms, negative 9% for your dollar. There you go. So the DXY, although it's only down like 5% for the year, about 5-7%, somewhere in there, it's only down 5% because it's being measured against like peso, won, euro, ruby, ruble, like yen, like just other worthless government issued currencies. So if you take a worth less than nothing dollar and you compare it to a worth less than nothing peso, it's just trash in, trash out. So that DXY, it's stubbornly high at 99.8, but I think it's going to continue to weaken. And I think next year it might only be 96, 95. And then I think by like 2030, that thing might collapse to like 80. And that will be the dollar collapse. The dollar will collapse. Bond yields will actually spike. We'll get into that. Okay, we'll get into that. So we have the dollar at 99.8, the DXY. But, you know, on this channel, cash has been trash, and that's served us pretty well. Gold right now at 4,166. We're fans of stacking physical precious metals for the long term on this channel. I don't really pay attention to mining companies. You know, if I'm sitting on a bunch of physical gold right now too, I don't want to buy miners, because if you buy miners, you're just stimulating supply. You're like peeing in your own punch bowl. I don't want a situation where my gold is going up and then I give a bunch of money to gold and silver miners so that they can bring more gold to market and dilute my supply. I want a situation where I'm holding all the gold and no new gold is coming to market and the miners are like implode and stay collapse. So I don't like mining stocks on this channel. When it comes to precious metals, I just want to stack the physical clumps of atoms and put them, like, you know, bury them or put them in a sock drawer or hide them or put them in a safe deposit box or a vault somewhere, or you kind of get the idea. So gold's at 4,166. That's crazy, guys. And if you're buying now and you're hoping we're at 8,000 in a few years, A, I think you might be right, and B, that is like not good. And you don't want to be living in a country where the gold price is $8,000, because it means your salary is about to get cut in half again. Your $100,000 per year salary, which was like the gold standard in 2019, is now buying about $50,000 worth of stuff. So if you think gold's about to go from 4,000 to 8,000, now your $100,000 per year salary that started buying $50,000 worth of stuff this year, it's going to start buying like $25,000 worth of stuff by the time that happens. I'm telling you, it's like the canary in the coal mine. You don't want that stuff going up. You want to own it as a hedge. It does protect you, but it's like bittersweet. You know what I mean? It's a double-edged sword, because if gold goes up to 25,000 per ounce in the next 5-10 years, your currency has collapsed, meaning your take-home pay is like nothing. You are being robbed every year for the rest of your life. Your grandchildren robbed. So do I think gold prices are going to continue climbing higher in the coming years? Yes, I do. Is that a good thing? No. And frankly, do I think the stock markets can continue to climb? Yes. But do I think that that's necessarily a good thing? Not really, you know, and we'll kind of get into that. Silver right now hanging out at 51.70. Guys, it's barely above its 1980 high of like $50. So I'm very bullish physical silver, okay? We have been on this channel and continue to be. You know, in prior videos, I was talking about how silver's down in the gutter at 22 per ounce, and I'm just waiting for it to wake up and smell the coffee and begin to outperform gold. There you go. Now that's what's happening. You know, silver's the sleeper. It lays low for 9-12 years, and then it just goes into these insane rallies. And we're kind of seeing that. But is silver like going into a speculative bubble? No, it's simply mirroring the collapse of your fiat currency. So do I think silver is going to continue moving higher? Yes. Do I think that's a good thing? No. Like, are you starting to get the idea of how I frame things, guys? But it works, you know what I mean? Platinum at 1,563 per ounce. You know, we were doing videos on platinum at 900. I was saying, man, platinum is much more rare than gold as far as crustal abundance. Like, platinum is much, much, much more rare than gold or silver. Very rare. So for platinum to be much more rare than gold and only like a third the price, like, platinum's got a lot of catching up to do, you know, and I kind of continue to have that mentality about platinum. I think platinum's going to continue to do well. Bitcoin at 87,000. We were talking about Bitcoin earlier, but here, let's settle in for a minute. So we were at like 125,000 not too long ago. Pulled back a little bit. It's volatile, guys. It just kind of is what it is. Buy the dips is what I'd say. I'd say buy the dips. Just buy the dips. Now, let me try to guess the bottom. To be honest, I want to say we've already bottomed. I want to say like we've already, like, this is the bottom. But could I be wrong and we go down to like the 50s? You know, maybe. But when I look into my hazy crystal ball as far as policies and knock-on effects of policy, guys, we're cutting interest rates like on December 10th. Again, that's the third cut. That's the third rate cut. Like, rate cuts make rich people stuff go higher. And we're cutting rates right now. We cut rates 3 times this year. And what are we going to do in 2026? Put that into grok. We're going to cut rates again. You know, there was a little debate last week about whether we were going to have the Fed cut interest rates at their December meeting. That's little one. Hi, little one. Hey, little one, you want to come out? You want to come over here and help me out with this video? She might come over and you can meet little one, you guys. But what I'm getting at is I think Bitcoin is closer to the bottom than the top. And the reason for that is because more interest rate cuts are coming. Interest rate cuts are rocket fuel for risk assets. And QE, quantitative easing, is also coming. That's rocket fuel for risk assets. And QT is ending. Like, I think it ended like in a week. It's going to be over. So the Fed is done letting treasuries roll off their balance sheet. Now when their treasuries mature, they're reinvesting them into U.S. treasuries. And pretty soon here, they're going to be printing fake dollars out of thin air, buying bonds with that, driving bond yields lower, fattening up the debt market, fattening up risk assets. And that's why I think Bitcoin's going to be back over 100 here pretty soon. And then it's going to be at 150 before we know it. And then I'd say looking way out, we're going way out, but I'm going to stand on this. By like 2030, 2035, Bitcoin's going to be $1 million. And you're going, oh, wow, that must be so nice. No, it's going to be horrible. Once Bitcoin hits 1 million and gold hits 10, 20,000 per ounce, and once the Dow Jones crashes up from 47,000 to, we'll call it 250,000, that's game, set, match. That's the dollar dying. And I think the dollar has only 1 or 2 business cycles left in it. So we have a longer-term credit cycle that started in 1981. It's like 50 years old, going on 50 years old. And we have a bunch of business cycles that last like 6 to 9 years inside that longer term credit cycle. So you might have like a 40-year credit cycle, and then we'll call it 5 or 6 business cycles inside of that credit cycle. Well, the credit cycle we're currently in, it started in 1981, and it's getting kind of long in tooth here. So I'm thinking we got like 1 or 2 more business cycles left before we have to hard reboot the global economy. And what that's going to look like, man, we'll get into it in a minute. So we'll talk about that in a moment. Just hang with me, guys. Just hang on here. So we have Solana right now at 137. So I like Bitcoin, I like Solana, I like Pepe. There you go. Those are my 3 favorite cryptocurrencies. Bitcoin, obviously. Solana, in order to like, I want to take out Ethereum, okay? Like Ethereum, that is like legacy 2021 boomer tech. Like I'm thinking Bitcoin, Solana, Pepe, and all other boomer tokens are obsolete. You know what I mean? That's kind of what I'm leaning. But I like Solana right now at 137, and ultimately my price target on Solana is $1,000. So throw trash at me when I'm wrong, but I think Solana is going to hit $1,000 in the coming months, years. You kind of get the idea. I do like other cryptocurrencies though, you guys. I like meme coins, okay? I like SPX 6900, Harry Potter, Obamasonic, Teninu, Apu, Mog, Pepe, Retardio on Solana, so Autism. So I like meme coins. I like some of them. But it's very difficult to discern which one's going to make it, guys. Like 99% of them are like won't. So whenever my hazy crystal ball like tells me this meme coin is going to do well, it's like I got to take that with a grain of salt, because I can, with a pretty confident degree, I can confidently say that next year, Dow Jones is probably going to go up around 12-15%. Like that's a pretty sure bet. But betting on where, Harry Potter, Obamasonic, Teninu is going to be, it's like, dude, I don't know, man. Do your best, Do your best. Buy the meme coins while they're cheap. Sell half at a double. Take the free ride. There you go. And some of these other coins that like aren't meme coins or Bitcoin, you have like Cardano, right? I own Cardano. I think it might do well. XRP, I own XRP, might do well. A little bit of Avalanche, got a little bit of that laying around. Some of these private security tokens like Monero or Zcash, you can maybe take a look at, like privacy coins, like Monero, that they're kind of having a moment right now. We got perpetuals, so you could, trading perpetuals is becoming a big thing. So maybe like Hyperliquid and Aster, those are some things you could look at, but who knows. Crude oil right now. Moving on to energy, and then guys, we're gonna just kind of bring it back, and we're gonna look into the hazy crystal ball, put a nice little bow on it, and call it a day. Crude oil is at 58 per barrel right now. I actually think we're moving higher, okay? But I've been saying that for years, and I've been wrong on that. My target on energy was like 150 per barrel WTI crude, and it went to like 120, rolled all the way back over. Now I've like lost the script. Like we're down in the gutter at like $58 a barrel. So it's like, I don't know. But I still think we should own mega cap energy companies like Exxon, Chevron, ConocoPhillips, Kinder Morgan, Halliburton, Marathon, like whatever. I'm going to leave that to you. Occidental Petroleum. Like I'm going to leave that to you to be discerned on which companies you pick. But I think you should just look up the mega cap energy producers, build a little basket, throw in a little bit of nuclear. We've been shilling stock ticker CCJ, Kamiko, on this channel forever. It's gone from like $10 a share to 100. There you go. It's down into the 80s. So maybe like buy the dip on CCJ. I don't know. I'm going to leave that to you. Some people don't like nuclear, right? Like nuclear works really well until it doesn't. Some systemic fragilities and risk in there, but I like it. And it's good for reliable base load. And then we can use I think nuclear paired with solar, that's like a goated combo. But again, I'm also shilling energy companies to you right now because we're going to need that stuff, guys. And assuming our civilization is growing, our energy needs are infinite. I mean, look at these data centers. Do you think they're going to need less energy tomorrow or more? You know what I mean? And for everyone pretending like big data is like the future, which it is, but they sure are pretending like they don't need energy to power those data centers, So it's funny right now, like 37% of the S&P 500 is concentrated into like 7 tech stocks. And then the entire energy sector is only 3% of the S&P 500's market cap right now, guys. But that tells me there's an opportunity there. So your S&P 500 should not have only 3% of its market cap allocated to energy, especially when you're shilling all these really energy intensive projects. Like it makes no sense. And that's what tells me, guys, I'm very bullish on energy. Now, when energy starts going up, will that drive up core inflation? Yeah. Will it drive up your gas prices? Yeah. Will it make the working man's life easier? No. Will it make this pencil, which is made of plastic, go higher? Yeah. Will everything I'm wearing right now, which is polyester, plastic, it's oil, will that go up? Yeah. So, not really like a good thing, but that's kind of what I see playing out. I could see energy like moving up into, 60s and 70s, maybe going into next year, and then eventually maybe 150 a barrel. We'll just have to see. So talking about the Fed, like now I'm going to kind of look into my hazy crystal ball. We're going to talk about policies, how bad they are. Then we're going to talk about the knock-on effects of policies and why I think that's going to keep pressing these asset prices like gold, NASDAQ, energy, crypto higher. All right, so here we go. We've done 3 interest rate cuts. this year. Should we be cutting rates this year? Absolutely not. We should have been raising interest rates. You want to get inflation under control, you raise interest rates. But is the Fed going to raise interest rates above the inflation rate, breaking the back of inflation? No. Is the Fed going to increase capital reserve requirements for banks, giving cash a little bit more power? No. Is the Fed going to throw the working man a bone? No. So you see kind of where this is going. The Fed could be taking us a route that's like very America first, centered around like, the working man having purchasing power, affordability. They're gonna lie to your face and say that they're gonna give you those things, but their policy is going to reflect the polar opposite, which is cutting interest rates. That's gonna make my life worse. It's gonna drive asset prices higher, though. It's what we've been saying on this channel for years. They're going to keep, basically, they've been screwing you for the last 5 years, and they're going to keep screwing you until further notice. How does that sound? So we got 3 interest rate cuts this year, should have done 0. And guess what, guys? We got 3 interest rate cuts for 2026. There was a little debate last week around if the December rate cut was even going to happen, but odds right now are 83% that we're going to get an interest rate cut on December 10th. That's going to incinerate the currency. So there you go. They showed up to the 5-alarm fire with gasoline, and they're about to squirt more gasoline on it on December 10th with a 25 basis point cut. So that'll be the 3rd interest rate cut of the year, and then we're going to have 3 more next year. So what do I see for next year? Business as usual, okay? What you've been going through, 2022, 23, 24, 25, continue. Business as usual. Bitcoin's going to keep moving up. Gold's going to keep moving up. Stock market's going to keep moving up. Real estate is kind of flatlining for right now, but I think ultimately it's going to keep moving up. Basically, guys, nothing's changed here. And I think energy is the odd one out, and it's going to wake up, smell the coffee, catch up, keep up, So energy looking good. Tech looks good. Gold looks good. Crypto looks good. Real estate is fine, man. If you can buy a house tomorrow, I would. Or you could wait for him to cut rates next year a little bit. Like maybe if you could get like a 4.5% mortgage, that'd be like amazing. Or 5.5%, somewhere in there. So rates are going to come down a little bit. But these house prices, guys, I don't think it's going to stop. I think these $500,000 dog boxes are going to be like $1 million here in the next few years. So just kind of what you got going on. Now, we've kind of talked about how rates are going to move lower. Yields are going to move lower. This is going to push those risk assets higher. It's going to make inflation worse. It's going to continue to eviscerate the middle and working class. But eventually, guys, something's going to give. And what's that going to look like? I don't think it's going to look like a crash. That's what CNBC would have you think. That's what you're, the financial advisor, which I'm not one. I'm just an armchair analyst, guys. Don't listen to me. I am not a licensed fiduciary. But what he's going to tell you is eventually, bond yields will spike and we'll get another garden variety recession. Asset prices will come down. The stock market will come down by 40%. You're going to want to buy the dip, and we're just going to rinse and repeat. I don't think that's going to happen next time, guys. I think the next recession we go into is going to be inflationary. So what's going to happen is yields in the bond market are going to spike. That's the bond bubble buckling. It's popping. And normally when that would freak out stocks, real estate, gold, silver, those things would start buckling too. But in this case, I think what's going to happen during the next 1 or 2 business cycles, we're going to end up in a situation where bond yields are going to spike. The bond bubble is going to buckle. The other assets are supposed to buckle, but then they're going to go, oh, wait, the crash is in the currency, and they're going to hyperinflate. And so I'm talking $1 million Bitcoin, 100,000, 250,000 Dow Jones, NASDAQ's 23,000 right now. I'm thinking 200,000. It's going to be horrible. You might be thinking, oh, that's so awesome. Must be nice. No, dude. And it's in parentheses, it's going to be really bad. So I think bond yields are going to spike. The bond bubble is going to pop. The dollar is going to implode. The DXY is going to fall down to 50 or 70. And then Bitcoin is going to shoot to the moon. Gold's going to shoot to the moon. Stocks are going to shoot to the moon. Real estate is going to shoot to the moon. Your wage is going to stay exactly the same. So now that $100,000 a year salary that you're making is going to buy $10,000 worth of stuff. So you're going to be poor. And you think no, that can't happen. Dude, Venezuela's stock market went up 100,000% and they're all poor. So I'm quite certain, guys, that maybe next recession or the one after that, basically, here's my thesis, guys. Take this to the bank or put this into ChatGPT or Grok or somebody. Basically, I think This credit cycle that's been going on since 1981 is eventually going to end in the next 6 to 12 years, we'll call it. Maybe next 1 to 2 business cycles we got left. And then when that thing goes, the credit cycle is going to end. And when the credit cycle is going to end, we're going to have to reset everything. And it's not going to happen in the way you think it's going to happen. Like, it's not going to be, oh, the dollar becomes powerful, unemployment spikes, and then stocks trade like down 90%. And then you come out with your savings and you buy $10 Home Depot and you get rich again. I don't think it's going to happen that way. Like I said, I think the bond yield is going to spike. The bond bubble is going to burst. The dollar bubble is going to burst. And then Home Depot stock is going to go from 300 a share to 3,000 a share. And that's not because, and that's just an example. Gold's going to go from 5,000 to 25,000. Bitcoin's going to go from 250,000 to 1 million. And that's not because you're getting rich. It's because now groceries have doubled. Gas is $15 a gallon. You're getting flushed. It's basically, guys, asset prices that we talk about on this channel, they're going to start to crash up. And that's going to be because the dollar empire is crashing. And it's not going to be fun. But you're going to want to get to the escape pods, you know what I mean? Because here's the deal, guys. There's no way Paul Volcker is going to come back and we're going to raise interest rates up to 20% and we're going to break the back of inflation and we're going to, I don't see it playing out that way. I see $2 to $3 trillion a year deficits forever. And then maybe by 2028, it's like we're printing $5 trillion a year. And then by 2031, we're printing $10 trillion a year. We're just adding zeros to the game, trying to inflate our way out of it. So it's going to be like inflate or die. And so you might be thinking, okay, so I will move to cash and hide under a rock. No, what you'll do is you'll go out and you'll borrow $10 billion and you'll buy 4 productive factories. And then when it comes time to pay back that $10 billion, all you're going to need is a Toyota Corolla. And now you've traded 4 productive factories for a Toyota Corolla. And that's exactly what happened in Weimar, Germany. And those are the people that made off like bandits. So the name of the game isn't get tiny and hide under a rock. The name of the game is run out, borrow currency that's about to be devalued by 50%, stuff it into risk assets like gold and Bitcoin, and just ride the lightning and ride out. So the one who saves dollars, I think, will be killed. And the one who borrows dollars that aren't theirs to buy Tesla stock will be saved. And that's going to give the 1% the golden parachute, and it's going to flush the working class. That's kind of how I see the party ending. So, guys, the party does not end in deflation. They're going to try to convince you of that on CNBC. Oh, deflation's the boogeyman. But I'm here to tell you over the next 1 or 2 business cycles, guys, inflation is the boogeyman. Hyperinflation is the boogeyman. So not to freak you out too much, but it's just, in my opinion, it's not going to happen the way that a lot of people think. So that's really all I got for you guys for right now. And we're just going to keep going, all right? I'm not trying to freak you out. Don't freak out on me, okay? We stay cool, calm, collected. This channel's for winners. We continue to win. We take action. And we fade everything the gaslighting clowns are telling us on the news. And that's been doing really well. And it looks to continue until things really go pathological. So I'll be there when it happens, guys. Thanks for hanging out with me. Like, subscribe, comment, share, whatever. You guys are awesome. And we're just going to keep going, all right? Till next time.